Hello friends, we are going to continue with redemption of debentures. And in the last lecture, we started with methods of redemption, right? And I told you there are 4 methods for redemption of debentures, and we started with the first method, that is lump sum method. That is redemption on maturity. This is on maturity, right? So this is what we discussed in the last lecture, and today we are going to do a practical problem on this. Clear? Now let us see the practical problems on this. X Limited issued 50,000 10% debentures of rupees 10 each on 1st of April 2015, redeemable at par on 30th of June 2016. The company received applications for 55,000 debentures and allotment was made to all applicants on pro rata basis. The debentures were redeemed on due date. What is the due date? 30th of June 2016. Assume that required investment was made on 1st April of the financial year in which redemption is due. So they say past necessary journal entries regarding issue and redemption of debentures, DRR, and investment. Assume that interest was payable on debentures on 31st of March every year, right? So first of all, what we are going to do is we are going to draw the picture of the question, right? So you have issued debentures on 1st of April 2015. Yes. How much debentures? 50,000 debentures of rupees 10 each. You received applications for 55,000 debentures, but you have issued 50,000 debentures, right? So these debentures amount to 5 lakh, right? So they are redeemable first 31st 16. Then we have a 3 months period till 30th of June 2016. This is the maturity date. Right? So this is the complete picture of the question. They say we have to pass the entries regarding issue, regarding DRR, regarding the investments, regarding interest also, and redemption. Right? So let us first start with the issue of shares. They say the company received applications for 55,000 debentures and allotment was made on pro rata basis. So what is the first entry? Applications, receipt of applications along with application money. So entry for that is bank account debit to debenture application account. That is for 55,000 shares multiplied by 10, 5 lakh 50,000, right? Now the second entry will be transfer of this debenture application money to debentures account, debenture application account debit to 10% debentures account, right? In debenture application, we have 5 lakh 50,000, but in the debentures account, we'll take face value, that is 5 lakh, and the remaining 50,000, we will refund that to bank account 50,000. Because there is no allotment money, all the money is being received in lump sum, so we will refund the excess money of 50,000, right? So these entries are on 1st of April 2015, right? On this date. Clear? Now comes 31st of March 2016. Now we have 31st of March 2016. Now what entries will you pass after 1 year? One, you have to create DRR, right? So the first entry you will pass for DRR, that is surplus account debit to DRR account. How much you have to create? Minimum 25% of the face value. What is face value? 5 lakh rupees. Clear? So you will create a DRR of 25% of 5 lakh rupees, that comes to 1,25,000. You can create a higher DRR, but there is no need of creating higher DRR here as the question is not specifying anything. So always create the minimum requirement, right? Minimum requirement is 25% of the face value, right? So here you have created DRR. See the last line of the question. They say interest was payable on debentures on 31st of March every year. Now at this point you have to pay interest also for this 1 year. Interest on 5 lakh rupees at the rate of 10%. What is the entry for that? Interest on debentures account debit to debenture holders account. This is interest due. How much? On 5 lakh rupees on face value at the rate of 10%, right? 50,000. And then the interest is paid. For that we'll say debenture holders account debit to bank account, right? 50,000 and 50,000. So we have done this period. Here we created DRR and we paid interest, right? These two things we have done in this period. Now see, your maturity date is 30th of June 2016. Now if you have the maturity in this period, you have to create DRI. You have to invest in the specified securities for the debentures which are redeemable by 31st of next year, right? So any debentures which are redeemable before 31st of March 2017, for that you have to create DRI on or before 30th April. But the question clearly specifies that assume that required investment was made on 1st of April of the financial year in which redemption is due. So redemption is due on 30th of June. So that means you have invested the money on 1st of April 2016, right? So now the next entry will be on 1st of April 2016. What is going to be the entry? Debenture redemption investment account debit to bank. Now what is the amount of investment to be made? Minimum 15% of the face value of the debentures to be redeemed. So 15%, right? This comes to 75,000 and 75,000. Clear? So on 1st of April you have invested in the specified securities. Specified securities mean the securities which have been specified for the purpose of redemption by Companies Act 2013. So because you have redemption due on 30th of June 2016, you have to invest money on or before 30th of April. So you have invested on 1st of April, right? Now, what will be the transactions during this period? Number one will be interest for 3 months. Isn't it? You will pay the interest for 3 months. Then will be encashment Encashment of what? Encashment of investments, right? And then will be redemption. So these are the entries that we will pass during these 3 months periods. First, we'll treat interest. Interest will be now due on 30th of June 2016. Interest on debentures account debit to debenture holders account. How much is the interest? On 5 lakh rupees at the rate of 10% for 3 months. Clear? So this comes to 12,500. This much clear? Right? Before redemption, we have 3 months of the financial year. We have to do the transaction for those 3 months. We have to pay interest for those 3 months. So when the interest is paid, debenture holder account debit to bank account, 12,500. Now on 30th of June 2016, you have the option of encashing these investments that you made on 1st of April. Right? You can encash these investments on 30th of June. So what will be the entry for that? Bank account debit to debenture redemption investment account. How much? You made an investment of 75,000 and you are now encashing these 75,000 by selling your investments. Clear? Now next, what you have to do? Now the other option you have is you can continue to show these investments. You do not encash these investments, you continue those for the further period, right? That is another option. Here I say that on the date of redemption you have encashed your investments. Now the entry for redemption, 10% debentures account debit to debenture holders account, right? So this is amount due to the debenture holders on maturity. Then when the payment is made, debenture holders account debit debenture holders account debit to bank account. How much? 5 lakh rupees. 5 lakh. Right? Then the last, I told you in the last we have to see what is the balance lying in DRR. Now, until and unless the question specifically says that we have used DRR for redemption, we assume that we have not used DRR, redemption is out of profits, right? If the question specifically says that we have used DRR for the purpose of redemption, then accordingly we have to see the balance. But here the question is not specifying, so I assume that DRR balance stands as such at 1,25,000 and I will transfer this balance DRR account debit to general reserve, right? 1,25,000, 1,25,000. Clear, friends? This is important, that until and unless the question specifies that DRR balance has been used for the redemption of purpose, you are not going to use that balance. That balance will as such be transferred to general reserve. Clear? One more thing, that whatever is the interest on debentures that you have paid, that will be transferred to profit and loss account. Right? Like interest on debentures, you have paid 50,000 here and 12,500 here. That means 62,500. You can pass an entry as profit and loss account debit to interest on debentures account as an expense as 62,500. Or you can show separately. Here you can transfer on 31st of March, you can transfer to P&L 50,000. Then here you can transfer 12,500. Right? So this is how you are going to deal with the question on lump sum redemption. Right? Always draw this map. This is definitely going to help you. Right? In the first period, divide this into periods. In the first period, we dealt with DRR. We created DRR. Then we dealt with interest as it was given in the question. Then in the second period, we see we have the redemption due in this financial year. So we have to create DRI as per the provisions of Companies Act 2013. So we created DRI on or before 30th of April 2016. And during this 3 months period, we treated interest, encashment of investment and redemption, and then transfer of DRR to general reserve. Clear? So this is how you do the redemption of debentures on maturity in lump sum. I hope it is understood. Right? You have understood it clearly. So basically, what is the order of entries? Let us write down. Let us write down the order. First, you have to pass the entries for issue of debentures. Then, at the end of the year, you have to create DRR out of profits. This is going to be minimum 25% of face value of debentures issued. Right? Then third, treatment of interest on debentures. Then in the year the debentures are redeemable, you have to invest in the specified securities, that is known as debenture redemption investment. That has to be minimum 15% of face value of debentures to be redeemed. See, this difference is very important. Here you have face value of debentures that have been issued. Here you have to create 15% of the face value of debentures that are to be redeemed in that particular financial year. Clear? Then you have redemption. Right? Then transfer of DRR to, here you have DRI, then in case you encash this, you will have the entry of encashment of DRI. Then the last you have transfer of DRR to general reserve. So basically this is the order that you have to follow. First, entries for issue of debentures. Then you have to create DRR that has to be minimum 25% of the face value of debentures issued. Right? Then interest on debentures if specified. Then you have to deal with debenture redemption investment. This is to be created in the year the debentures are to be redeemed. And the value is equal to minimum 15% of the face value of debentures to be redeemed in that particular financial year. Then at the time of redemption, what you can do is you can either encash these investments or you can continue with these investments for future. Clear? Then we have to pass entries for redemption of debentures, then transfer of DRR to general reserve, and there also I told you that until and unless question specifies that you have used DRR for the redemption of debentures, do not use it for redemption. Transfer the DRR to general reserve. If the question clearly specifies that you have used this much DRR for the redemption purpose, then accordingly whatever balance is left in DRR, that will be transferred to general reserve. Clear? Right, friends? And if the question says you have a certain amount of DRR in the DRR balance, cross verify whether you have 25% of the face value or not. If it is not 25%, then make it 25%. Right? Then make it 25%. I hope this much is clear. So this was method 1 for redemption of debentures, that is redemption on maturity in lump sum. Clear? So if you have any problem, friends, email me at ksjteaching@gmail.com. Right? So in the next lecture, we are going to start with method 2. Method 2, that is redemption by draw of lots. Right? Redemption by draw of lots. Right, friends? So that's all for this lecture, friends. Thank you so much.